The Central Bank of Nigeria, CBN, unveils Monetary Policy Trust, task Nigerian banks on recapitalization to support targeted $1 trillion GDP. American investors, companies eager to engage with Nigeria. Plus, Brent holds above $80 a barrel ahead of OPEC Plus meeting. The program is Business Express, reaching you from Abuja, Nigeria's capital. I am Musa Abubakar, your guide. Well, let's begin the program by telling you that the Central Bank of Nigeria, CBN, says it is confident that inflation will be effectively managed with continuous increase in the monetary policy rate in the next 2 quarters. Central Bank Governor Olayemi Kadoso disclosed this in Lagos. The Central Bank Governor, who unveiled the bank's Monetary Policy Trust and outlook for 2024, explained that the Apex Bank's effort to reduce excess liquidity through open market operations and issuance of treasury bills, along with continuous increase in interest rate, is yielding the right result in checking inflation.
And extensive consultations will be conducted with banks and FX operators before implementing any new requirements.
Central Bank says it needs most stable exchange rate, control inflation, and create an enabling environment for businesses to thrive.
The effectiveness of the Central Bank's monetary policy tools and has spent time fixing the transmission mechanism to ensure the decisions of MPC meetings actually result in desired objectives.
The central bank will soon direct banks to increase their capital to enable the president to achieve a $1 trillion economy, and technology will continue to play a crucial role in providing financial services. Now, the federal government is determined to enhance small enterprises from the grassroots in line with the poverty eradication programs. Awal Haluru reports that the Small and Medium Enterprises Development Agency of Nigeria, in partnership with Katsina State Government, organized financial empowerment initiative for rural enterprises for capacity building on rudiments of starting businesses.
Nationally inclusive in the activity of the federal government. And what the program is all about is in 3 layers, which is about sensitization, capacity building, and provision of grants to the nano businesses.
I also advise the participants to utilize the grant given to them efficiently so that their business can grow.
Medan target rural areas. We want to at least reduce the poverty level to the barest minimum.
Now, it will no longer be business as usual. This is the Senate note of warning to some federal government-owned enterprises while approving government projections on revenue and expenditure for 2024-2026. National Assembly correspondent Lami Ali reports that the lawmakers vow to extensively amend existing laws to reduce the 9 trillion naira projected budget deficit for 2024.
A significant number of the federal government's revenue-generating agencies engage in arbitrary, frivolous, and extra-budgetary expenditure.
In the area of waivers, in 2024 alone, they have provided for 2.7 trillion waivers.
A lot of issues have been raised here that we will continue to work on. Even after this passage, we should really commend President Bola Ahmed Tinubu for the initiative so far. And so there's a lot of hope for Nigerians.
We are talking about our mineral resources that's being exploited in that area, not only that area. We are talking about establishing an institution that will provide human resources to drive these enterprises.
Now, the approved 2024 to 2026 medium-term expenditure framework and fiscal strategy paper as a proposed total spending of 26 trillion naira, comprising 16.9 trillion naira in retained revenue, 9 trillion naira budget deficit, 7.8 trillion naira in new borrowings, 1.3 trillion naira for statutory transfers, 8.2 trillion naira for debt servicing, and 1.27 trillion naira allocated to pension gratuity and retiree benefits. Joining me to discuss these issues is development economist Dr. Okemgu. You're welcome to Business Express.
Thank you. Pleasure to be here. Good afternoon, Nigerians.
Okay, let's start with the key assumptions. We've seen oil price benchmark at 73.96, $73.96 per barrel. Then we have oil production at 1.78 million barrels per day. Exchange rate of $1 to 700 naira, then inflation rate of 21.40%, with a targeted GDP growth of 3.76%. How feasible?
Not ambitious, very feasible. Not ambitious, very realistic.
Okay.
But when you just oppose it against two very major factors that you mentioned, budget deficit, this is where you begin to probably have some worry. Okay, budget deficit at 9 trillion, borrowing at 6 trillion or something, that will be giving you a total of 15 trillion exposure. This is where the challenge will be. But against the figures reeled out, inflation at 21% is not bad. For exchange at 700, to a dollar is realistic too. So I think it's a budget that wears, realism as its clock.
Okay, there are about more than 16 trillion naira as revenue. Then how does the fiscal policy and tax reform committee, their recommendation, how does it fit into this 2024-2026 projections?
Good question. Our fiscal policies might need a little bit of remodeling, considering that the central bank governor has come out to say, okay, you know what, we are not going to be meddling in what you might call fiscalization, okay, which had happened, before, when you had the central bank, leaving its core duties, of, basically being advisors on monetary policy, and then, delving a little bit into the fiscal space. If you're talking about the fiscal policies, your last intro before we got on air, I had a senator talking about mineral resources. We need to probably take a deeper look into that area, not just mineral resources, but natural resources as a subsector. Our water resources, our mineral resources, and then probably the technologies that can be able to drive the both of them. It should form a larger plank of fiscal policies if we are going to be reaching this revenue target of 16 trillion, because you would need obviously to be creating new revenue pathways.
Okay, the finance minister talked about we can definitely be dependent on borrowing to finance debt and things like that. And now the conversation has now turned towards conversation about recapitalization of the bank so that they can support the 1 trillion naira targeted GDP, $1 trillion targeted GDP. What do you make of this?
What do the banks do primarily? The banks lend. So if you're recapitalizing banks, you're making them stronger to be able to lend. That's their primary function. Okay, so there's no way you can't borrow. And there's nothing wrong with borrowing, but there's everything wrong in what you're borrowing for, okay, and what you're borrowing against. So I don't think it's possible for us, the way it is right now, for us not to depend on some kind of, borrowing instrument, even if it's not, direct borrowing. There has to be some kind of, barter. There has to be some kind of, innovative strategy. I mean, we've done some FSAs already. We've done some forward purchase agreements. Remember, okay, that's borrowing technically. So if the finance minister says yes, borrowing, like they say, who goes a borrowing goes a sorrowing. But with the debt, with the debt and the level of infrastructure, deficit we have in Nigeria, and recognizing that infrastructure, critical or social, are also very, very, very essential to us, being able to get more productive. There's no way. I mean, we don't have what it takes, okay, to build what you might be able to call an economy that is, globally centered to be attractive. That's the truth, okay? And for you to get to that point where, you begin to smell like a rose, you need to put some, some facts. I mean, there has to be stuff on ground, and this stuff has to be, your power infrastructure has to be right. Right now, against 200 million Nigerians, we are generating less than 10,000, megawatts of electricity. Okay, against lesser endowed countries like South Africa with lesser population that are doing over, 40,000 megawatts. Look at our road networks. I mean, I don't think we have about up to 10,000, 6,000 kilometers of roads in Nigeria that are paved. Okay, these are the basic. Your transport infrastructure must be right, and not only right, it must also be intermodal. Okay, and if you don't do so, your energy infrastructure must be right, be it energy mix, be it whatever it is you want to do, if you're going to be bringing, the right sands and the right steps and the right looks in your direction vis-a-vis investments.
Now, how does inflation play in this whole scenario? Because I'm seeing an increase in inflation, though we've seen a deceleration in month-on-month basis. So how does it actually fit into this whole picture?
It depends on the kind of inflation you have. If you have stagflation, okay, which is near what we have, then it is not good. If you have inflation that is driven by too much products, coming into your market, then you have a chance, of now probably, lowering the value of your currency and then getting more people to come in. So truth of the matter is that our inflationary trends are not driven by production, they are driven by consumption. This is where you have a little bit of a challenge, okay? If we're able to tilt it towards production, and this is why China, with all its inflationary trends and its exposure to debt to GDP, which is over 79%, ditto for America, they are still up and running and lending to other people. So it's all about productivity, really. That's the point I'm trying to make. We don't have inflation that is that can play. Okay, we have inflation that is stifling. All right. So if we're able to move more towards, productivity, and this is why I mentioned natural resources subsectors, and that might just be our best pathway out of inflationary trends. But to answer your question directly, inflation or inflationary trends will impact negatively, of course, on your economic development and growth.
Okay, now, do you see this as a step towards achieving the $1 trillion economy that we have aspiration?
We can surpass it. We can surpass it. We have 84 million hectares of land. We have 333 dams. We can surpass it, Mustafa. We can. I mean, what's 1 trillion to Nigeria? What's 1 trillion? Just from with our mineral resources alone, we are totally, endowed with over 3 billion metric tons of coal. If we were selling at $100, for 1 metric ton, and we're selling only 100 billion metric tons, how much would that be? That would be in the excess of $100 trillion. Ditto for iron or ditto for limestone. Okay, I mean, if we wanted to start populating our dams, with different aquatic species, what do you think is going to be happening? We'll be feeding the world with fish. So, point I'm trying to make is that we should get out of our traditional fixation on what has been, our core. And this is driving towards SDG, getting this done, getting that done. I think we should move towards now being more innovative, first in our skill development and developing our people, equipping them with the right skills. Second, identifying those areas that will have comparative advantage. We rule the world, in tin production. We rule the world in oil palm production. Today we're importing oil from Malaysia. Okay, now why has that happened? Because a lot of our research institutes were ruling the world in tobacco production. We are ruling the world in tea. Okay, a lot of these cash crops, that are still in need. I mean, people are even going the way of organic more, than synthetic these days. So why are we not applying, our energies and our focus on those areas? Look at Mambila Plateau. Mambila will give, you the best of the Harrod seeds if you may, if you want. Okay, that land is still there. Okay, look at our cattle economy. That will give you $1 trillion like yesterday. I mean, considering that we have 24 million cattle roaming around, if you were just to take the statistics that those 24 million cattle will be needing 1 billion gallons of water every day, 500,000 metric tons of forage, if we needed to start producing forage, that will give you the $1 trillion you're talking about.
Okay.
So there's so much we can do, really.
Thank you very much, Dr. Emeka Kengu. It's been a pleasure having you on the program.
Pleasure to be here too. Thank you.
Now, moving on, stakeholders in the electricity sector are pushing for increased adoption of renewable energy solutions through effective consumer finance, investment support, and stakeholder collaboration. Speaking during the 2023 Renewable Energy Conference organized by the Renewable Energy Association of Nigeria in collaboration with Heinrich Ball Foundation in Abuja, AFAM, Victor Ogene, Chairman, House of Representatives, Committee on Renewable Energy, said with the fast dwindling global fossil fuel reserve, renewable energy was the future of electricity generation, adding that Nigeria must step up and be more intentional in investing in the renewable energy and technologies. According to him, access to electricity has remained a big challenge in Nigeria, triggering the need for alternative energy sources to augment what we currently have. He explained that as of 2022, the total renewable energy capacity in Africa was 59 gigawatts, representing a growth of nearly 5% in comparison to the previous year, keeping an upward trend. And now to energy. Oil prices were little change on Monday, with Brent holding above $80 a barrel as investors awaited the OPEC Plus meeting later this week for an agreement to cut supplies into 2024. Brent crude futures edged up 12 cents or 0.2% to $80.70 a barrel, while U.S. West Texas Intermediate crude futures were up at $75.64 a barrel, up 10 cents or 0.1%. Gold atop 6-month peak on softer U.S. dollar. Bets on Federal Reserve. Let's see other commodities around the world. Last stock market rises by 0.17% in week ended November 24th. Let's join Muplanda Kok for details.
All share index appreciated by 0.17% to end last week on a positive note. Market capitalization also advanced to 39.173 trillion naira. A total turnover of 2.4 billion shares worth 22.6 billion naira in 33,230 deals exchanged hands in the week by investors. All other indices finished higher with the exception of NGX Pension, Merry Growth, Consumer Goods and Lotus 2, which depreciated, while the NGX ASEM, NGX Oil and Gas and Sovereign Bond indices closed flat. The financial services industry led the activity chart with 1.7 billion shares valued at 11.6 billion naira traded in 14,585 deals. The services industry followed, while in the third place was the ICT industry. Trading in the top three equities, Universal Insurance, Veritas Capital Assurance, and Unity Bank accounted for 809.4 million shares worth 492.6 million naira. A summary of price changes shows that 59 equities appreciated in price in the review week. 21 equities depreciated in price, while 76 equities remained unchanged.
The European market start the week slightly lower. Oil and gas stocks deep. Well, Bossa, they tell us, is this the bull or the bear?
I would say the bear is leading. It's mixed actually, but I would say the bear is actually leading into this trading session. Anyway, hello and welcome to the Global Market Review. European markets were lower to the new trading week, days after the region's stock 600 indices reached its highest level since September 20. DAX dipped 0.12%, FTSE 0.17%, while CAC 40 of France topped 0.02%. Asia stocks fell on Monday as the Chinese market dropped due to a decline in property firms, while Japan's service inflation surged to a 45-month high. Nikkei dipped 0.53% at 33,447.67. The Shanghai Composite dropped 0.30% at 3,031.70, and the Hang Seng Index also depreciated 0.20% across 17,525.06. Now, U.S. futures dipped Monday as Wall Street looked to build on 4 straight positive weeks for the equity market. Futures for the Dow Jones Industrial Average is low at 0.09%, S&P 0.09% as well, and the Nasdaq Composite followed suit at 0.07%. Now, stock futures in Africa wasn't quite a fantastic trading with African market, as most of the stocks fell, followed same trend with their global counterparts. That's the market review for the first trading day of the week. I am Bossede Abel. Back to you, Musa.
Well, thank you, Bossede. Well, that's it. That's Business Express. Let's do this again on Tuesday by 9:30 a.m. Enjoy the rest of your day.